Okay, dear students, so today we are starting a new very important topic, and that is corporation tax. And first of all, the weightage of corporation tax is like it comes 15 marks, 15 marks compulsory, 15 marks compulsory in section C, right? Plus 2 to 3 marks sometime in section C again with planning question, and remaining 5 marks or something like in MCQs and MTQs. So you can think like it's a average weightage is like 22 to 23 marks of corporation tax, which is a very good weightage, very good weightage, right? So if you have good grip in this topic, it will help you in clearing your exams, right? Okay, so now first thing, listen. First of all, you can see one thing, one format on your screen. You remember I taught you individual taxes as well. Now close your eyes and think about it. Whenever you are asked to calculate tax for an individual, normally three columns comes in your mind. Number one, non-saving; second, interest income; then dividend. Non-saving, interest, dividend. These are the three columns. It comes in your mind when you talk about individuals. But yes, whenever somebody asks you to calculate tax for companies, corporation tax, this one single column, see the screen, this one single column will come in your mind. So the first number is trading profit. Now if you double click on this trading income, you will go to this place. Listen, how to calculate trading income. This is the format of trading income. Hope you remember the whole journey which I taught you when I was teaching you trading income. This journey starts from accounting net profit to tax adjusted trading profit. This journey starts from accounting net profit to tax adjusted trading profit. There are a lot of adjustment like add less, allowed, not allowed, capital allowances. Hope you remember. So finally you came to tax adjusted trading profit, pre-tax adjusted trading profit. Okay, so this is the whole journey, and this final answer will be posted here on in the first line. Okay, so the first thing to be calculated is trading income. The second thing is property income. Now hope you remember in early days of yours, when you start this F6 course, I think on the third lecture, third topic, I taught property income. Now how to calculate property income? If you double click here, you will go here. So this is the P&L of property income. Rental income less allowed expenses. Rental income less allowed expenses. Okay. So you need to prepare this P&L, and the final answer will go in the main sheet. Okay. Right. Then the third thing is called gains, chargeable gains. Now when I was teaching you chargeable gains topic, capital gains, in lecture 8 or something, I taught you CDT for companies, So this is the area. Now if you click on the gains, this is going to be your destination. Listen, this is going to be your destination. Listen, so this is the format of gains. I am sure you remember it. Disposal proceed, DP, less cost is unindexed gain, and for companies you get indexation allowance till 31st December 2017. So when you deduct indexation allowance, you will finally get chargeable gain. You will be finally getting chargeable gain. So this is the format: disposal proceed, less cost, unindexed gain, less indexation allowance. Finally you get chargeable gain. Right? Okay, now, and this chargeable gain will come here. Now the fourth thing is very interesting, and the new thing, which is interest income. This is a special done in treatment of corporation tax. On If you click on interest income button, see there is an interest income button. So if you click on interest income, double click on interest income, you will land here. You will land on this working. This is very interesting working. This box is called interest income, and also it is called loan relationship. Interest income and loan relationship. Now what things comes in this boxes? What thing comes in this box? The The first thing is interest income from non-trading activities. Now, first of all, you will add interest income. As a student, you may ask one thing, sir, can we ever earn interest income from trading activities? Can we ever earn interest income from trading activities? Yes, if you are a bank. If you are a bank, for bank, interest income is the primary income. For bank, interest income is the primary income. So for bank, it's the trading income. And if you are a bank, then interest income will go in this trading income head. Interest income will go in trading income head. But if you are an organization other than bank, then interest income is always from non-trading activities. Now, one good news, our examiner has given us the words, it is written by your examiner, that never ever you will get the question of bank, right? So in our course, interest income will always be from non-trading activities. This is how it works. Okay, so first thing. Now second, interest expense. See, now the word has changed. Interest expense, that means now you have taken loan. You have taken loan. So interest expense on loan to finance, interest expense on loan to finance non-trading activities. Non-trading, now you have taken loan to finance non-trading activities. Now as a student, you may ask, sir, what if we have taken loan? What if we have taken loan for trading activities? Then that interest expense will go here. That interest expense will be deducted from trading income side. But yes, if you have taken loan for non-trading activities, then it will go in this head. Now as a student, you may ask the practical examples of these two. Let me give you the practical examples. If you have, if you have taken loan to buy inventory, for example bank overdraft, then this inventory means for trade, inventory is for trade, so that means this loan has taken for trade, so that loan interest will be allowed from trading income. But now the second example, now you have taken loan from bank to invest in stock market, now your let us say I am a teacher, so my primary activity is teaching. If I have a superstore, so my primary activity is selling that inventory, right? Pepsi, Coke and all these things. So if I have taken loan to invest in shares, so now this is my non-trading activities. It's not a trading activity. Okay. So in this case, such loan interest expense will be deducted from here. Now the third thing, less interest expense on loan to buy property for letting. Yes. For example, if you have taken loans, listen my three steps. If you have taken loan, why you have taken loan? To buy a property. Why you have bought property? To rent it, to earn rental income. So if these three conditions met, then such interest expense will be deducted from loan relationship box. I repeat, if you have taken loan to buy property for letting purpose, such loan interest will also deducted from here. Now as a student, you may ask, sir, it won't be deducted from property income. No, 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 no. In companies, it won't be deducted from property income. But yes, in individual, there are some special rule of finance cost restriction. When I was teaching you individual property income, in the second lecture, last 15 minutes, I taught you finance cost restriction topic, and that is a non-routine topic. Better you revise it, okay? So this is the interest income head. This is the interest income head, and this final answer will always be positive. See, always positive in F6. In your F6 tax course, this is the good news, that there won't be any loss, negative number in this interest income head. There won't be any negative number in this interest income head. Okay, now, so this is the format. Now let's come to the format again. The first thing which comes is straight. There is only one column in tax, in corporation tax. In as compared to individual, in individual there are three columns: non-saving, interest and dividend. In corporation, only one column. So the first column is trading profit. The first column is trading profits. Okay. The first thing is trading profits. You know how to calculate it. I just taught you. Then property income. It has a separate P&L. Gains has a separate working. And interest income, once again, here is our separate working. And what is the name of interest income box? The famous name of interest income box here is loan relationship. Here is loan relationship. Okay, right? Now, once you add these four, you get total profits. You get total profit. From total profits, you deduct one thing which is called QCD. Now, what is the full form of QCD? It's qualifying charitable donations. Qualifying charitable donations. Okay. So these donations will be deducted from this total profit. Now, unlike individuals, in individuals, you remember there were charitable donations, gift aid donations. They were net. They were always given net, and you have to gross up. You have to do divide by 80 into 100. But in this company side, it's already gross. It's already gross. Already gross. These are already gross. So never ever do divide by 80 into 100 with QCD. Never ever do divided by 80 into 100 with this QCD, right? Now finally you will get total taxable profits. Total taxable profit, or sometimes we can call it taxable profits. Taxable profits are the profits on which we apply directly tax rate. Taxable profits are the profits on which we apply direct tax rate. Okay. Now what are the tax rate? That's something in suspense. I'm going to tell you in this class for sure. In 5 minutes I'm going to discuss everything. So my dear student, finally let me recall you, this is the main format. See, this is the main format. This is the pro forma for corporation tax. Trading profits, property income, gains, interest income. If you add these four, you get total profits. From total profits, here less qualifying charitable donations. Qualifying charitable donations. And then you get total taxable profits. And total taxable profits are the profits on which we apply directly tax rate. Now, few relevant discussions for you. Number one, for companies, QCD is always gross. I already taught you. Number two, dividend income. If company has they made investment in any company, for example, if our company has bought shares in another company and if our company is receiving dividend income, so dividend income is full-time exempt. There is no tax on dividend income. There is no tax on dividend income. Now, next thing is, for companies, interest income is taxed on accrual basis. Now this is a very famous game. As compared to individual, there will be lot of comparison. There will be lot of comparison with individual tax now. So for individual, interest income is taxed on cash basis. For individual, interest income is taxed on cash basis, right? That means you must receive interest receive in your fiscal year, then only you take it. But here for companies, interest income is taxed on accrual basis. Accrual basis means how many months you have provided the services, how many months are accrued. You need to count the months, you don't need to check the cash. Okay, so for companies, interest income is taxed on accrual basis. Now let me show you these famous accounts. Oh, I'm sure you all guys have done financial accounting, basic FA level, F3 level accounting. Okay, so first thing, this is the interest payable account. For example, if you have taken loan, first case, if you have taken loan, then make this account. Now opening accrued expenses, your opening liability, it will come here. Closing accrued expenses, your closing liability, it will come here. Actual cash interest paid during the year will come here, right? And finally you get this red P&L balancing number. This is your interest expense for the year on the basis of accrual. This P&L number is your interest expense for the year on the basis of accrual. So whenever you are doing company's question, make this account and calculate interest expense first. Calculate interest expense first. I'm sure you guys have done this in your F3 level, basic level. Now, if you have given loan to somebody and you are earning interest income, then make this account. So now opening accrued income is your opening receivable, it will come here. Closing accrued income is your closing receivable. Then whatever interest income you have received, cash received, actual cash received will come here. Now you will add these two, 1 and 2, and you subtract this number, you will get the red one. The red one PNL is basically interest income for the year. The red one PNL is basically interest income for the year, interest income for the year, right? Okay, so this, for companies this amount is relevant. For companies this interest income will go in the loan relationship head. Now let's do some more comparison. Listen, see this account. If this would be the question of individual, so in individual, interest income is taxed on cash basis. Whatever cash you have received, so this amount will be taxable. This amount will be taxable. This amount will be taxable. This amount will be taxable in case of individual. But in case of companies, this amount is taxable, this PNL one. Okay. So you can make these accounts, or you can do through statements as well. Some students are good in making accounts, so make this. Otherwise, simply listen. Closing accrued income plus cash. Closing accrued income plus cash received minus opening accrued income will also give you the same thing. Okay. Okay. Now for property income, now for companies property income, now the fourth line, for companies property income is taxed on accrual basis. For companies property income is taxed on accrual basis. This is once again change. Remember individual, when I taught you in the beginning, for individuals property income is taxed on cash basis. That means inflows and outflows you need to check. But for companies property income is taxed on accrual basis. Accrual basis means how many months you have provided the services, how many months you have provided the services, right? Okay. Now the last and very good news, important news, company pays tax for accounting period, not fiscal year. There is no fiscal year in companies. It's the different approach. It's accounting year. Company pays tax on accounting year. Company pays tax on accounting year. Accounting period. Company pays tax for accounting period, and you need to check that accounting period in every question. Okay. So finally, have a look this thing, please. Okay. So now let's move on further topic. See this. This is the corporation tax format which I just taught you. Now we are digging down in more things. So this is the corporation tax return. See, the tax return means the tax calculation thing. The first thing is trading income. The first thing is trading income. Then you have property income, capital gains, interest income. When you add these four incomes, you will get total income or total profits. Both are correct. Then from these total income or total profit, you deduct qualifying charitable donations. Qualifying charitable donation which are already gross. It will be given already ready-made gross in the question. You don't need to gross it up. Okay. Now finally you will get total taxable income. total taxable profits or total taxable income. Both words are correct. Now, from these total taxable income, one more thing we add, and that is called dividend. See the screen. Dividend received from non-group companies. Dividend received from non-group companies means on which you have holding of less than 50%. Companies in which your holding is less than 50% are called non-group companies. Okay. Now, let me show you. For example, this is A company, you are A company, and you have 20% investment in B company. You are A company and you have 20% investment in B company. So this 20% means this is a non-group company. But if you are A company and if you have 60% investment in C company, so that means this is a group of company. This is your subsidiary in easy terms, right? So if the holding is less than 50%, if the holding investment holding percentage is less than like this, so now whatever dividend is coming, whatever dividend income is coming from this B company to A company, that will be called dividend received from non-group companies. Okay, so non-group means less than 50% holding. Non-group means less than 50% holding. Please check it out. So from total taxable income, we'll add dividend received from non-group companies. Dividend received from non-group companies. Okay, this is. Now finally you will get augmented profits. Augmented profits. Okay, so now two profits are very important. See the format. There are two profits which are very important. Number one is total taxable income. This is very important. Total taxable income is the income. Total taxable income or total taxable profits are the profits on which we directly apply tax rate. No doubt. On which we directly apply tax rate. But how we'll decide tax rate, that thing is augmented profit. Through augmented profit, we decide tax rate. So I repeat last time. Through total taxable income you apply the tax rate. On total taxable income you directly apply the tax rate. On augmented profits, through augmented profit you calculate that tax rate. Okay, so this is the key. Now few more things. See the screen. Corporation tax is charged on taxable income. Yes, on taxable income or taxable profits we directly apply corporation tax rate and you calculate corporation tax. But the tax rate is determined. Augmented profits are used to determine rate of corporation tax, right? These two things. On taxable income, now next thing is very important. On taxable income, rate of corporation tax will apply. Oh, sorry. Taxable income earned before 1st April 2023. This date is very important for us. So if you have earned company's corporation tax income before 1st April 2023, there was a flat tax rate of 19%. This was subject to 19% corporation tax rate. 19% corporation tax rate. 19% corporation tax rate. 19% corporation tax rate. But yes, after 1st April 2023, which is our today's topic, taxable income earned after 1st April 2023 is subject to the following corporation taxes. I repeat. So this date is very important. 1st April 2023. If your income is earned before 1st April 2023, then it was very easy. Flat tax rate of 19%, nothing else. And after 1st April 2023, these are the rates. See this. These are the rates. See, if your augmented profit is between 1 to 50,000 pounds, 1 to 50,000 pounds, then the rate of corporation tax is 19%, which is small rate. If your augmented profits are more than 250, I'm teaching you 1 and 3rd first. More than 250,000, then flat rate is 25%. Flat corporation tax rate is 25%. I repeat, see the screen. If your augmented profits are between 1 to 50,000, means less than 50,000 pound, flat tax rate of 19%. If your augmented profits are more than 250,000 or more, then it's 25%. Now see the middle line. But if your augmented profits are between 50,000 to 250,000, then yes, 25% main rate, and you will get a special relief which is called marginal relief. you will get this marginal relief, this special relief also you will get. This special relief also you will get. Okay, so I repeat, 0 to 50,000 only 19% rate, more than 250,000 pound AP only 25% rate, flat rate and no other relief. But between 50,000 to 250,000 you will have a 25% rate with marginal relief. What is the logic of this marginal relief? Let me tell you. Because just think, last year your income was 49,000 pounds. Last year your augmented profits were 49,000 pounds, so you were paying, let us say, 19%. But let us say this year only just 2,000 pound increment in your income, so your income become 51,000, and now you are in the second band, not band. Now you have crossed the 50,000 limit, so your rate will be 25%. Now one very important thing, these are not bands, these are not bands like individual. In individual we studied bands. Bands means from 0 to 37,700 lower rate, then after 37,700 on additional income you will have higher rate. Now here this is not the case. If you cross 50,000, just think, if you cross 50,000 on your whole income, on your complete income, the rate will be 25%. Are you getting? So if you just cross 50,000 on your complete income, your rate will be 25%. So read this. In corporation tax, these are the limits of profits which determine one tax rate for the whole profit. One tax rate for the whole profit. Don't forget this. These do not work as tax bands. These are not bands. Just think, if you just cross 50,000 straight complete on your complete profit, the tax rate will be 25%. But yes, marginal relief is only available if your augmented profits are more than 50 and less than 250. But once you cross 250,000, then there will be no marginal relief as well. Okay, one good news. Don't worry about these new things. I'm going to teach you in detail, extreme detail. A lot of questions I'm going to teach you. Don't worry. So one more thing. Now, this is the formula of marginal relief. Can anybody see this? Please check the screen. Marginal relief, the formula, it's very 1 kilometer long formula. I sometimes say this formula is 1 kilometer long. So it's going to be upper limit minus augmented profits multiplied by the standard fraction, which is 3 upon 200. This is the standard fraction. Multiplied by taxable income, means total taxable profits, divided by augmented profit. This is the formula for marginal relief. Again, you don't need to worry about it. It's my job. I'll teach you this. I'll practice you this. Now, upper limit and lower limit will be apportioned due to period of account. Upper limit and lower limit will be apportioned due to, number one, period of account different from 12 months. Yes. See, if your, remember the limits, the lower limit was 50,000. Wait, let me show you. See, the lower limit is 50,000 and upper limit is 250. These are the two limits. Lower limit is 50 and upper limit is 250. Now, normally these limits are fixed, but yes, you need to apportion these limits because of two things. You need to apportion these limits because of two things. Number one, if your accounting period is less than 12 months, if your accounting period is less than 12 months, okay, wait, let me show you. See, for example, your accounting period is 9 months. 9 months. So how you will apportion it? Like it's 50,000 and lower limit is 50 and upper limit is 250, which is for 12 months accounting period. So you will be doing into 9 upon 12 into 9 upon 12. This will be 37,500. This will be 187,500 almost, right? Okay. So what if your accounting period is 6 months only? If your accounting period is 6 months only, then how are you going to do it? So 56 months accounting into 6 upon 12 into 6 upon 12. So this will be 25 and this will be 125. So my respected student, when are we going to apportion our limits? When are we going to apportion our limits? When are we going to apportion our limits? The first thing for which we are going to apportion our limit is If your accounting period is less than 12 months, then you need to apportion the limits. The second reason, see this, if you are part of 51% group of companies, if you are part, see the screen, if you are part of 51% group of companies, means let us say you are a company, see this, you are a company and you have 60% holding in B and 80% holding in C, means more than 50. Just look at the percentage. More than 50% holding. More than 50% holding in B company and more than 50% holding in C company. Okay. So that means now this group contains total three companies, A, B and C. These are total three companies. So now you need to apportion your limits by 3. Just count the number of members of these group. But yes, the holding must be greater than 50. Holding must be greater than 50. So these are 3 members. So the limits will be like this. Wait, let me show you. Normal limits are normal limits are 50,000. You will be doing 50,000 divided by 3 and then 250,000 divided by 3. So it's going to be 166667 and this is going to be 8333 something, I think, right? So as a student you may ask the logic, let me see, the limit proration is bad for us. This limit proration is not a good thing for it, it's a bad thing for us. Just think, your lower limit was 50,000. Your lower limit was 50,000. That means now in normal circumstances, if your income is less than 50, your tax rate is only 19%. But now once you have apportioned the limits, now you need to see the revised limits. So your revised limit is now not now 50,000, it's 1667, which means now if your profits are more than 1667, you will have to apply 25% tax rate. So this limit proration is bad for us. Now let me give you logic. Why they are saying that if you have more members of 51% group of companies, then you will have to apportion the limits according to the number of participants in the groups. Why? What is the logic? Because people were doing one game with the tax department, that for example I have 100,000 pounds income and I have only one company. Sorry, I have 80,000 pounds income and I have only one company. So this 80 is more than 50. This 80 is more than 50. So obviously I'll have to pay higher tax. So what game I played? I made two companies, both in my control. I made two companies and I split this income into two pieces like 40-40. So if you see these companies alone, so 40,000 and 40,000 is less than 50,000. So now that means I can save my tax. I can pay reduced tax rate, although both of these companies belongs to me. So this is the game. So tax department said, okay, now if you have two companies, so let's apportion the limits. Still you have to pay the higher rate of tax. But again, I would say the logic is not useful for you. I just give logic, just it's my habit, that's why. Okay, otherwise keep this thing very simple. Corporation tax limits are apportioned because of two reasons. Number one, if your accounting period is less than 12 months, then you need to apportion. Number two, if you are part of 51% group of companies, then you need to apportion. These are the two reasons why we apportion the limits. I hope you can see this. These 51% group of companies are also called associated companies. See, associate has come from association. Association means relationship, and now the relationship means control relationship. See, 50% plus. Okay, now this next paragraph is right now irrelevant. It's right now irrelevant, leave it. This is the artificial bands which we create just for the planning purpose, but in reality there are no bands in corporation tax. In reality there are no bands in corporation tax. Okay, now dividend income is exempt income for companies. It's a tagline. No tax on dividend income. No tax on dividend income. No tax on dividend income. Okay, so no tax is charged on dividend income. However, if dividend income is received from non-group companies, then it will be included in augmented profits, which will impact corporation tax rate. See, dividend received from non-group companies is added here. Dividend received from non-group companies is added here. Can you see? Can you see? So it will increase your augmented profit and so the tax rate. But again, that tax rate will be applied here. That tax rate will be applied on taxable income. So again, this dividend received from non-group companies are exempt. No tax on it, but it will just increase your tax rate. Okay, it will just increase your tax rate. Are you getting? And last thing, if you are receiving dividend income from group of companies on which your holding is more than 50, then it won't come anywhere. It won't come anywhere in the corporation tax. So read this line again. Obviously, this is the new thing, so you need to read it multiple times. Dividend income is exempt income. No tax on dividend income for companies for sure. But yes, if that dividend income is coming from non-group companies, so it will be included in augmented profit calculation. Okay, so it will impact your corporation tax rate. Last thing, already taught you, company pays tax for their accounting period, not fiscal year. Not fiscal year. Fiscal year is for an individual. Now we are going to start questions. We are going to start questions. We are going to start questions. Question number one. Question number one. Now just to save our time, I have already made the formats. I'll just teach you the tax calculation. No more irrelevant stuff. Okay. So company has the following incomes for the year. For the year means 12 months. The accounting period is exactly 12 months. When the accounting period is exactly 12 months, then no need to apportion the limits. No need to apportion the limits. Okay. And there are no 51% group of companies. See the screen. In this question, there are no. So your lower limit is simple. Lower limit is 50 and your upper limit is 250. Simply write the limits. Okay. And yes, as these questions are made by me, so I'm saying this, these incomes are after 1st April 2023. After, okay, so new rules will apply after 1st April 2023. So new rules, the lower limit and upper limit. Yes, before 1st April 2023, old rules. Which old rule means flat 19% tax rate. Flat 19% tax rate. Okay. So you have a trading income. Let's prepare the format. Listen, what I told you. In individuals, you always have to make 3 columns: non-saving, interest, and dividend. But in companies, only 1 column. So first, trading income 20,000 you will write. Property income 10,000. Capital gains 5,000. There is no interest income right now. So this is going to be your total income or total profits. Then you will deduct qualifying charitable donations. You will get taxable income, and then you will add dividends from non-group companies. You will get augmented profits. Okay. Now everything is irrelevant. Now only two numbers are relevant: taxable income and augmented profit. The first rule. First of all, we'll decide the tax rate. The tax rate is decided using augmented profit. See, augmented profit is less than lower limit. Augmented profit is less than lower limit. So you need to apply a flat tax rate of 19% tax rate. Flat tax rate, and that tax rate is applied on taxable income. So this will be 33,000 times 19%. 33,000 times 19%. 33,000 times of 19%, 6270. 6. Okay, so this is the first answer. Now let's move to question number 2. Question number 2, sorry, this is question number 2. Please be very active, don't sleep, be very, very active, energetic. Again, you have trading income. Let's make the tax return format single column. Trading income is 180, property income is 60, capital gain is 80. And one thing you notice, in companies there is only a single tax rate on all income. Unlike individuals, non-saving has got different tax rate, interest income, dividend income, capital gains different, QG, NG, RPG. No such stuff here. All incomes have separate one tax rate. So trading income, property income and gains, then you will get total income. From total income you deduct qualifying charitable donations, you get taxable income, and then you add dividends from non-group companies, this number, so that augmented profit. Now you know the limits. Your lower limit is, again in this question, your accounting period is complete year means 12 months. Okay, so your lower limit is 50 and your upper limit is 250. No need to apportion any limit. Now right now it's basic questions. So can you see your augmented profits? This time your augmented profits are more than upper limit. Your augmented profits are more than upper limit, more than upper limit. So the tax rate will be flat 25% without any margin, no margin relief is available. So, and that flat rate is applied on this taxable income. So 297,000 times 25%, which is, I think, 74250. Okay, so one more question done. One more question done. Question number 2 is also done. Question number 3. Now maybe you will get margin relief in this question. So in question number 3, let's make the format, fill the format. It's already filled. Trading income 65, property income, capital gains, total income, less qualifying charitable donation, you get taxable income, and then you add dividend from non-group companies, you got augmented profit. Now wait, again it's a year means 12 months, and there are no 51% group of companies, so your lower limit is 50 and your upper limit is 250. Okay, so let's compare it now. This time your augmented profit is between 250 and more than 250, more than 50,000 and less than 250. So first of all, higher rate will apply, 25% rate apply plus margin relief. 25% rate will apply plus margin relief, and that rate will be applied on this taxable income always. So this will be 87,000 multiplied by 25%, 87,000 multiply by 25%, which is 21750. Okay, now we also have to deduct marginal relief. Now let me show you the formula of marginal relief. This is the formula of marginal relief. See, upper limit less augmented profit into standard fraction into taxable income divided by augmented profit. Okay, let me do it. Upper limit is this time your upper limit is 250 minus your augmented profits are 116. Okay, then 3 upon 200 is the standard fraction into taxable income means TTP, total taxable profit, which is 87 divided by 116. I don't no need to write three zeros, or if you want to write, okay, write it. Don't look here like this. 87,000 divided by 116,000. Okay, or you can write 87 divided by 116 because zeros will automatically get cancelled. We all know that. Okay, so this will be 1508. Use your calculator, you will get 1508. So now deduct it. 21750 minus 1508 is 20242. Okay, so one more question done. One more question done. Okay, question number 4. I would recommend you to pause the screen, try it yourself. Pause the screen, try it yourself, and then watch my solution. So, trading income is, first of all, it's a year. Year means 12 months. Okay, and no more group of companies like say 51% group of companies. So again, your lower limit is 50 and upper limit is 250. Okay, so my dear students, so you can see your taxable income is 137, augmented profit is 146. Now use your brain. Augmented profit is between 50 and 250, so higher rate will be applied. Okay, so but the rate is always applied on taxable income. So 137,000 times 25%. It will be 34250. 34250. Now, yes, whenever your augmented profits are between lower limit and upper limit, you have to calculate margin relief. You get a relief, margin relief. And what is the formula of margin relief? Let me recall you. Upper limits less augmented profit into standard fraction multiplied by taxable income divided by augmented profit. So upper limit is again upper limit is 250,000. ओके, तो अब इसका मार्जिनल रिलीफ कैसे निकलेगा? अपर लिमिट इज 250,000 माइनस ऑगमेंटेड प्रॉफिट कितना है 146 इनटू फ्रैक्शन है 3/200 और मल्टीप्लाई बाय टैक्सेबल इनकम इज 137 डिवाइड बाय 146. 3 जीरो लिखना है तो लिख लो, मर्जी है. 137/146। ठीक है, चेक करते हैं भाई क्या नंबर आ रहा है। 1464, ये बना 32786। चलो, अब यहां से बेटा देखो लिमिट्स प्रोरेट होना शुरू हो जाएंगी। अब यहां से लिमिट्स प्रोरेट होना शुरू होंगी। मैंने कहा था कंपनीज की, कॉर्पोरेशन की लिमिट्स दो वजह से प्रोरेट होती हैं। एक, अगर अकाउंटिंग पीरियड लेस देन 12 मंथ्स हो, और दूसरा 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 जब आप 51% ग्रुप ऑफ कंपनीज के मेंबर हो। तो इस बार अकाउंटिंग पीरियड तो पूरा ईयर है, ईयर का मतलब 12 महीने, ईयर का मतलब 12 महीने, तो इस वजह से तो लिमिट्स प्रोरेट नहीं होगी। ठीक है, लेस देन 12 मंथ्स पे होती है। सुनना, okay, let me do this question again because I used the other language, sorry. So see, I just told you that from this question now you need to prorate the limits, you need to prorate the limits, you need to prorate the limits, okay, the lower limit and upper limit. But see, account the limits of corporation tax is prorated because of two reasons. Number one, if your accounting period is less than 12 months, the first reason. And the second reason, if you are the part of 51% group of companies. You remember I showed you this, right? So in this question, they are saying it's a complete year, it's a complete year, it's a complete year, it's a complete year. So year means 12 months, year means 12 months, okay? So because of this accounting period, you don't need to prorate it. But yes, company D group comprised of three companies. C, total three members, total three members of 51% group, total three members of 51% group, which I explained you. Remember, I explained you this. I explained you this thing. Do you remember this thing? You remember this thing which I explained you. So this thing I'm talking about, okay? So now you need to prorate the limits. You need to prorate your upper limit and lower limit. Your upper limit is normally 250,000. Lower limit is 50,000. And yes, there are total three members, so you need to divide by 3. You need to divide it by 3. So this will be 83333, and this will be 16667. Okay, 1667. Now let's start the question. Now this question is very normal, very common, very simple question. Just fill the tax return. Trading income 48, property income 22, capital gain 15, total income is 85. Then you have qualifying charitable donation of 6 that you need to deduct, taxable income, and then they are giving you dividend from non-group companies. Yes, here you need to add dividend from non-group companies, but see this, dividends from group of companies are never recorded. This is totally irrelevant thing. Dividends from group companies are never recorded anywhere in the corporation tax sheet. Yes, non-group companies are added here. So you have augmented profits. So now my dear student, let's decide the tax rate first. Tax rate, this is your augmented profit, this is your augmented profit. Listen, and now compare augmented profit with revised limit. So this 91,000 is more than 1667, as well as 83333. That means it is greater than upper limit as well, it is greater than upper limit as well. So you need to use flat tax rate of 25%, and there are no marginal relief available, no marginal relief available, because your augmented profits are more than upper limit. Okay, so now this will be 79,000 times 25%, 79,000 times 25%, which is 19750. Okay, so this is the answer. So from this question we have started apportioning the limits. We have started apportioning the limits. Okay. Now the next thing is question number 6. Question number 6. I would request you to pause the screen and try it yourself. Try it yourself. Now listen. So you have, now this time your accounting period is 9 months. See, 9 months means you need to apportion limits because of accounting period. Okay. And how many group of companies? Total 4. 51% group of companies are 4. So both reasons are there to apportion the limits. Okay. So your upper limit is 250,000. Your upper limit is 250,000. Lower limit is 50,000. Divided by 4, first thing, and then multiply by 9 upon 12. Right? I have apportioned because of both reasons. See, group 51, 4 members of 51% of group of companies, and then accounting period was 9 months, so 9 upon 12. Now let's see what are the limits. So limits are 46875. Upper limit is 46875 and lower limit is 9375. Okay. Now check it out. The return has already made. This is easy thing. Don't worry about this format. It's very easy. Trading income, property income, gains, then total income, less QCD. You get taxable income, then dividend from non-group companies. But again, this is irrelevant. Again, this is irrelevant. This is irrelevant. Dividend from group companies is totally irrelevant. Okay. So now just pick up the AP. Augmented profits is 62. 62,000 is greater than your upper limit. 62,000 is greater than your upper limit. So again flat tax rate of 25% will be applied and no marginal relief is available. No marginal relief is available. So this will be 11750. Okay. Now this time the accounting period is only 8 months, but examiner is silent about there are no group of companies, no group companies. Okay. So I would request you to pause the screen, try it yourself. Pause the screen and try it yourself. Okay. So now we have only one reason to apportion the limit, that is accounting period. So upper limit is 250,000. This is 50,000 times 8 upon 12. 8 upon 12. So this will be 166,667 and this will be 33,333. 33,333. Okay. So now let's start. In this question, very interesting question now. In this question, there is no dividends. There are no non-group dividends. So, but just for your sake, I'm writing no add dividends. There are from non-group companies are 0. So that means your augmented profit, I would say AP. Augmented profit means AP is same 48,000. Whenever your dividends from non-group companies 0, that means now your taxable income or taxable profits, we call it taxable profits as well. Now your taxable profits and augmented profit will be same. Your taxable profit and augmented profits will be same. Okay. Now let's just follow the simple steps. So AP is 48,000. AP is 48,000, which is, now see the revised limit. Use the revised limit. Don't use the old limits. This 48,000 is greater than 33,333 and less than 166,667. So obviously higher rate will be applied. Higher rate will be applied with marginal relief. Higher rate will be applied with marginal relief. Be careful. So your taxable income is 48,000 multiplied by 25%, which is 12,000. 48,000 multiplied by 25% is 12,000. Now let's apply marginal relief. You remember the formula for marginal relief. The formula for marginal relief is upper limit. What is the revised upper limit? 166,667 minus augmented profit, which is 48,000, into 3 divided by 200 multiply by in this question your taxable income and AP is same, so normally you don't need to write, but okay, 48,000 divide by 48,000, obviously it will come 1 cancelled out in 1, so this will be 1780. So final answer will be 10020, 10020, 10020, 10020, 10020. Okay, now in from this question I'll teach you one thing extra. I hope you did it correct. Now let me move to the back screen. See, you remember this paragraph I skipped. Well, while giving the lecture I skipped this paragraph. Now first listen my announcement. In corporation tax there are no bands. If somebody asks you to calculate corporation tax, just solve in the way which I taught you just now. Okay, there are no bands. But just to teach you, there is a topic which is called losses, corporation tax losses. Just to teach you that topic, corporation tax losses, we sometimes make the bands. And we'll prove that bands, but don't use it in the normal way. Don't ever use it in the normal question. Okay, now read. If in exam question there is no dividend, first condition, there is no dividend from non-group companies. First thing, only these the bands which I am going to teach you right now is only applicable when there are no dividends from group of companies, non-group of companies. Then instead of using the concept of limits and marginal relief, following tax bands can be used to calculate corporation tax. Small profit rate below lower limit 19%, then between lower limit and upper limit it's 26.5, and above upper limit is 25%. Now I'm not going to give you the logic of this 26.5%. I'm not going to give you the logic of this 26.5%. Just it's all pure maths. Because in reality, when your AP, your augmented profit goes above 50,000, the higher rate is applied on complete income. Higher rate is applied on complete income, but in this bands calculation, we are thinking that higher rate is only applied on additional income. That's why we have increased the rate. That's why we have increased the rate. Okay. So these are now these are the bands. Now these are the bands. Below lower limit 19%, then between lower limit, that means, or if I talk about the standard lower limit between 50 and 250,000, it's 26.5, and more than 250,000 it's 25%. So now I'll be using these bands. Now these rates will be used like tax bands rather than the tax limit in which single rate was used along with marginal relief. Okay, so now I'm going to calculate the tax again, but one condition for these bands, if there is no dividend from non-group companies. And now in this question number 7, the question number 7 is which I just taught you, in that question there are no non-group dividends. So let's do it one more time. See this. Okay, so your taxable income was 48,000. Now you'll pick this 48,000 income and you'll see what is the lower limit in this question. In this question, revised lower limit is 33,333. So first, now let's do it with bands. So on first 33,333, on first double three triple three, on first double three triple three, you will apply the first band rate 19%. Let's do it. It will be 6 triple three. Okay. So out of 48,000, listen students, out of 48,000, you have calculated tax on double three triple three. Now how much is left? Now how much is left? Now how much is left? 14667. Now this 14667, see the limits, revise limits. Now this 14667 lies between lower limit and upper limit, lies between lower limit and upper limit. So on this 14667, you can apply the rate of 26.5%. Please apply it. So it will be 3887. Now please add it. It will be 10020. And if you add these two, it's 48,000. See the same answer. Check it out. Same answer. You can see same answer. It's a magic. It's a magic. See the same answer which you calculated through the first method in the second method is also coming the same. But I would again request you that don't use these bands. Don't use these bands in a normal question. Only they will be used in next chapter for planning purpose. Okay. I was just giving you an idea for this thing. So this is the second way for calculating tax. When there is, what is the condition? When there is no non-group dividends, no non-group dividend, then you can do it in this way and you can prove it yourself. Let me show you those bands again. See, these are the bands. If you want to read it, 19, 26.5 and then 25 above upper limit. Now one more question. One more question. I would request you to pause the screen and do it yourself. Pause the screen and do it yourself. Start, please. See, they have written year. Year means 12 months. Year means 12 months. So 12 months means no apportionment because of accounting period. And see the screen. There are no group of companies. 51% group of companies. So your lower limit is 50 and upper limit is 250. Upper limit is 250,000. Okay. Now, and luckily in this question there are no non-group dividends. So just make the format trading, property gains, total income, QCD, taxable income. Then dividends are zero. Just for your easy, dividends are zero. So 87,000 is your AP. 87,000 is your AP. 87,000 is your AP. Okay. Listen. So let's start. First of all, normal tax. Your AP in this question, the limits are 50 and 250, 50,000 and 250,000. Your AP is more than 50 and less than 250. So definitely higher rate will be applied. Higher rate is 25%. So 87,000 multiply by 25%, which is 21750. 21750. 87,000 multiplied by 25%, which is 21750. Now as in this question your AP is more than lower limit and less than upper limit, so definitely marginal relief will be calculated. How to calculate it? 250,000 minus 87 into 3 divided by 200 into 87 upon 87. You know these two are same, so it's 2445 and your final answer is 19305. 19305. 19305. Okay. Now again you can verify. Again you can verify through those bands. Let's do it. Your taxable income is 87. Now let's do it like bands. On first 50,000. On first 50,000 the rate is 19%. So 9,500. And out of 87 you have already calculated tax on 50. So 37,000 is left. 37,000. Obviously the second band rate is 26.5%, which is 9805. Let's do it. So this will be 19305. See, the answer is same. Answer is same. This is the magic. This is the magic. This is the magic, please. You can see the magic. I hope you did it correct. Now let's do question number 11. In question number 11 is again the question. Question number 11 is again the question, which is, it's my handmade question. So I'm saying this question is again after 1st April, 1st April 23. Okay, that means the latest, with the latest changes. So you have, if you want to do it, you can do it. You can pause the screen first and then try it yourself. That's the biggest advice. Okay, again, trading income 33, properties 25, interest income is 16,000. There is no gains now. So total income is 74,000. Then you have qualifying charitable donation 5,000, taxable income, or you call it taxable profits as well, 69. Now there are two dividends. Dividends from group of company, non-group companies. Yes, this is relevant, but this is not relevant. This is not relevant. Dividend from group companies never comes anywhere. I already told you. So you'll add 20,000, you will get augmented profits. Now let's apportion the limits. You know, the limits are apportioned because of two reasons. Number one, if your accounting period is less than 12 months, yes, this time it's 10 months, and you have two companies in the 51% group. So let's apportion it. So it will 250,000 divided by 2 into 10 upon 12. Okay, then 50,000 into 10 upon 12, right? So let's check it out. What are the limits? The limits are 104167. Okay, and the lower limit is 20833. 20833. Now let's decide the rate. For rate, you need to check augmented profits. Augmented profit is 89,000, which is more than 20833 and less than 104167. So yes, the higher rate will be applied with marginal relief. So higher rate will be applied on taxable income, which is 69,000 times of 25%. So this will be 17250. Less marginal relief will be upper limit, which is 104167, minus augmented profit, which is 89,000, into fraction 3 upon 200 into 69 divided by 89. Okay, so this will be 176. So your final answer is 17074. Yes. Okay, so this is your one more question done, which is question number 11. Then you have question number 12. Again, the same request. Pause the screen. Try it yourself. You can do it. You can now do it. So 7 months accounting period. So 7 upon 12 limits will be apportioned 7 upon 12. And then you have three companies. You have three companies in the group of companies. So 250,000 divided by 3 times 7 upon 12. 50,000 divided by 3 times 7 upon 12. 48611 9722. Okay, so now this time your augmented profits, can you see the return? Augmented profit is 72,000, which is more than lower limit as well as upper limit. Okay, so higher rate will be applied with no marginal leave. Higher rate will be applied with no marginal leave, so it will be 57,000 times 25%. 14250. Now question number 13. Check it out. Now this time they are saying it's a complete year. Year means 12 months. Okay, so no more apportionment because of accounting period. And but yes, you have four companies in the group, 51% group. So divide by 4. Limits will be divided by 4 only. So what will happen? This is 250,000 divided by 4, and this is you have okay. 12500 12500. Agreed. So now let's, this return forming is easy. Trading income, property interest income, total income, QCD, everything is easy, you know that. Now my dear students, and we know this is again irrelevant. Dividend, no, sorry, this time only non-group, so it's irrelevant. It's relevant. So now AP is 131,000. Augmented profit is 131,000, which is more than lower limit as well as upper limit. So higher rate with no marginal relief. So 125,000 times 25%. 31250. Okay. Now finally I am moving to a different topic. Finally I am moving on a different topic. Listen. Be very careful. Can you see this question number 9? Each company had the following income for the year ended 12 months, 31st December 2023. Now, can you imagine this accounting period? If the accounting period is ending on 31st December 2023, so it must be starting on 1st January 23. So this is your accounting period. Let me write it. 1st January 23 to 31st December 23. Now be very careful. So if you see this 12 months, there are 3 months lying before 1st April 23. 3 months are lying before 1st of April 2023. Before 1st of April 2023. Right? Okay. And before 1st April 23, rates were different. Let me show you the rates and then I'll give you some more lecture on it. See. Read this. See the screen. On taxable income rate, corporation tax will apply. Taxable income earned before first is subject to before there was, see, this was the real story. Before 1st April 23, there were no limits, lower, upper limit, all bullshit, nothing. Only 19% tax. But yes, after 1st April 23, these all things are there. These all things are there. Okay. So now we need to work hard differently. We need to work hard differently. But before we move on, let me tell you something extra. See this. Can you see the screen? Yes. Read these 4 lines. Something very interesting here. First line, individual pays tax for fiscal year. You all know you have done individual. So individual pays tax for fiscal year. Individual pays tax for fiscal year. Individual pays tax for fiscal year, right? But company pays tax for accounting period. So you need to check the accounting period always. I repeat, individual pays tax for fiscal year. Yes. Company pays tax for accounting period. Now third line. For individuals tax rules, the new rules comes with every fiscal year. As the fiscal year changes, new tax rate, new rules comes. Okay. But for companies, tax rules changes with financial year. This is the new terminology. This is the new terminology which is called financial year. Which is called financial year. This I have to teach you. Okay. So I repeat, 4 lines. Individual pays tax for fiscal year. Company pays tax for accounting period. For individuals, new tax rates, new rules comes after every fiscal year. But for companies, new rules comes after financial year. Now what is financial year? Listen, financial year always starts on 1st April and ends on 31st March. So here you can see this is the financial year, 1st April 21 to 31st March 22 first, then 1st April 22 to 31st March 23 second, then 31st March 24. Now how to write the name? This is called FY21. Why we are calling it FY financial year 21? Because it is starting in 21. It is starting in 21. This will be called FY22 because it is starting in 22. This will be called FY23. Okay. Now, my dear students, very important thing. Important thing is that for financial year 21 and 22, there was a flat tax rate. Whatever your corporation tax income is 19%. Okay. But now, after 1st April 23, this area new rates, new limits, 19%, then 25%, then marginal relief. Okay. So now let us say in the question they gave you accounting period. In the question, if the accounting period given in the question is 1st of January 23 to 31st December 23, if you have this accounting period, just like I showed you last question. So now can you plot this accounting period in the above diagram? Yes. 1st January means from here. January, Feb, March, April, May, June, July, August, September, October, November and December. This is your accounting period. Now first time this accounting period is lying in 2 financial years. In 2 financial years. These 3 months, January, Feb lies in financial year 22 and these 9 months lies in financial year 23. Now for financial year 2022, the flat tax rate was 19%, but for financial year 23 the rates are different. Whole story is different. So now you need to apportion the profits and then you need to apply the tax rates. This is the story. Okay. So from now onwards, be very careful. If the accounting period is after 1st April 23, then you know the new rules. But if it is before 1st April 23, then be careful about the old rules, which is flat rate of 19%. And sometime it happens that a few months of accounting period lies previous year and few years lies in the current financial year. Let's start the question. This is the question. Listen. Company had the following incomes for the year ended. See, for the year ended 31st December 23. So 3 months in the last financial year and 9 months in the current. 9 months with new rules. Trading income, yes, you can write here. then property, total income, then QCD, taxable income, and now there are no group a non-group dividend. So now taxable income and augmented profit will be same. Definitely taxable income and augmented profit will be same. Okay, now we all know we calculate tax on taxable income. So first of all we are going to calculate for 3 months, first 3 months. So 73, be very careful, 73,000 is the income, taxable income for 12 months. So you will be doing 3 upon 12 first. 73,000 is the taxable income for 12 months. So you will multiply it by 3 upon 12. So you will get 3 months income. And then the flat tax rate at that time was 19%. At that time there were no limits, nothing. So 73,000, this will be 3468. Okay, now let's move to the last 9 months. The last 9 months are definitely new. The last 9 months are definitely new. So for that you must write the limits. Now treat it as a normal question. Normal question. See, it is written here. Here means 12 months. The complete accounting period is 12 months. So when accounting period is exactly 12 months, you don't need to apportion the limits. And there are no 51% group of companies see the screen. There are no 51% group of companies see the screen. So that means accounting period is 12 months and no 51% group of companies. So your lower limit will be 50 and upper limit will be 250,000. Lower limit will be 50,000, upper limit will be 250,000. Okay, now do it very simply. Don't think about 9 months, just solve it normally. So now tell me your taxable income is 73, taxable income and AP, augmented profit is also 73, which is more than 50 and less than 250, more than lower limit and less than upper limit, so higher rate will be applied. So you will write 73,000. Now 73,000 is the profit for 12 months, but only 9 months lies in 9 months lies in last new financial year. So you will do 9 upon 12 because you have already calculated profit for first 3 months, tax for first 3 months. Into the new tax rate now is 25% because you are higher rate, 13688. Okay, now finally you need to calculate marginal relief because you are more than your augmented profits are more than lower limit and less than upper limit. Okay, so what's the formula of marginal relief? 250,000 upper limit less augmented profit is 73, multiply by the fraction is 3 upon 200, multiply, now wait, multiply by what, the one more fraction, 73 upon 73, multiply by 73 upon 73. Let me write here, wait, sorry. And now finally, should I tell you one thing? Now finally you need to multiply marginal relief with 9 upon 12 as well, because see, here you are also doing calculation for 9 months, here you are also doing calculation for 9 months, so you will have to write here 9 upon 12 because now you will get marginal relief also for 9 months. Why? Because only 9 months of this accounting period lies in financial year 23. Okay, so this is the very important thing. I am again highlighting it. This is the important part which you should not miss. Which you should not miss. So this will be 1991. Now add both of the upper taxes and then deduct the relief. It will be 15165. 1 15165. Okay, so I hope this is yes, I agree. This is something different. This is something different, and this is something which you should see very actively while calculating corporation tax. Okay, now I request you, see the accounting dates are now a little bit changed. I request you to pause the screen and solve it yourself. I request you to solve, see now it is 30th September 2023. I request you to pause the screen and solve it yourself. So when it is year, see again they are saying year. Year means 12 months and wait. So and no group of companies. So lower limit is 50, upper limit is 250. Now wait. Should I draw the accounting period? Yes. It's ending on 30th September 2023. So and it's a year. So means 12 months. So go back 12 months. So it will be 1st of October 22. Okay. So now if you see, you can see first of 6 months are before 1st April 23 and 6 months after 1st April 23. You can see 6 months, 6 months. Okay. So let's do it. First of all, your taxable income is 111,000 and the previous 6 months before 1st April 23, you will do 6 upon 12 and the tax rate was only 19% at that time. The tax rate was only 19% at that time. So it will be 10545. Okay. Now with the 6 months after 1st April 23, definitely new rules will apply. So your taxable income and augmented profit will be same in this question because no group dividends. So now let's compare it with the limit. This triple one triple zero, this triple one triple zero is higher than lower limit but less than upper limit. So obviously 25% tax rate will be applied with margin relief. So this will be triple one triple zero is the profit for 12 months. So you will be multiplying it by 6 upon 12 and then now the tax rate is 25%, which is 13875. Okay. Now how to calculate margin relief? Very simple rules. Upper limit, which is 250, minus augmented profit, which is 111,000 into 3 upon 200 into 111 divided by 111 into, now the very important thing, finally don't forget to do 6 upon 12. This is the key. See, because here you are also doing 6 upon 12, same thing you will do here. Okay, so it will be 1043. Okay, now almost all the question done, but let me just increase the level of difficulty a little bit. Now I will be giving you a 9 months accounting period, 9 months with 2 financial year. Okay, but I won't give you all details. Just I will give you taxable income and dividends, all these things. Okay, so let us say now that in the new question you have accounting period of 1st January 23 to 30th September 23. So it's a 9 months accounting period. Be very careful. Okay, now your taxable income is, for example, 135,000, and your group dividends are dividends non-group are 15. So your AP is your augmented profit. AP is 150, right? Now let's start. Let's start. First of all, there are no 51% group of companies. First of all, if I if we all know the limits are apportioned because of two reasons. Two reasons. Number one, first reason is accounting period is less than 12 months. Yes, this time it's 9 months, and this time no group of companies. So only because of accounting period. Lower limit is 50 times 9 upon 12. Upper limit is 250. So this will be 37,500 and this will be 187,500. Okay. Now, if you are active, you can see that in these 9 months of accounting period, 1st January 23 to 30th September 23, first 3 months falls in financial year 22. In first 3 months falls before 1st April 23, and then last 6 months falls after 1st April 23. Okay, so I have to calculate like this: first 3 months and then last. Okay, so 135,000 is the profit taxable income into, wait, 135,000 is for 9 months. Now basic maths should be strong. 135,000 now it's for 9, it's not for 12 months now, it's for 9 months. So into 3 upon 9, not 3 upon 12. See the basic maths. Multiply by, in previous financial year the tax rate was 19%. Okay, now for last 9 months, again last 6 months, definitely you need to check the limits. So AP is 150,000, which is more than lower limit and less than upper limit, more between lower and upper limit. So higher rate with marginal leave, higher rate with marginal leave. So how to do it? You will be writing 135,000, and now 135,000 is for 9 months and we have to apportion it for 6 months. So 6 upon 9, not 6 upon 12, into 25%. 22,500. Now let's do the marginal relief thing. Marginal relief. Upper limit. What is the revised upper limit? It is 187,500 minus AP is 150,000 into 3 upon 200 into 135 upon 150, and finally see, here you have done 6 upon 9. So you have to write here also 6 upon 9 to make it like with like comparison. Okay, this is the key. So let me do it for you guys. Three three 7.5. So this will be 30712.5, 30712.5. Okay, so now please, the class is still going on. Listen. First thing, this is a new topic and these calculations were new, so you need to do these questions again. Please do it again. Your these PDF slides will be available. Try to practice it one more time. Number one. Number two, now I need to do the practice with you guys of this area as well. See that how to calculate trading profit. Exam kit question, past paper questions are there. How to calculate trading profit, property income, interest income, this loan relationship. So now we'll be doing some kit question practice for this area. For this area, see this area working. Okay, and I will, in the next two meetings, in the next two or one meeting, I'll be teaching you this area, the major area is this upper area with 19% tax rate, because you will see the question, they will be before 1st April 2023. Now in the next class, I will be teaching you, in the next meeting, I will be teaching you questions with accounting period of before 1st April 23. So in those classes, I'll be using only flat tax rate of 19%. I won't be discussing any of these new limits or all, because the objective will be the practice of upper part, the practice of this trading income, property income, gains and all. Okay, right? So you will understand easily by looking at the accounting period. Accounting period, if the accounting period lies completely before 1st April 2023, then there was a flat tax rate of 19% and no no more limits, nothing else. Okay, so stay tuned and please work hard. Thank you, take care.